MFRSA operating segments sets out guidelines for how entity should report information about its operating segments in annual and interim financial reports. It also specifies the required disclosures for an entity's products and services, geographical areas, and major customers. The standard defines an operating segment as a component of an entity that engages in business activities from which it may earn revenues and incur expenses. And it has activities regularly reviewed by the entity's chief operating decision maker, which is CODM, to make decisions about resource allocation and to assess its performance. And it has decreed financial information available. This standard is mandatory for entities whose equity or debt securities are publicly traded or that are in the process of issuing such securities in a public market.
Hello everyone, for question 2 under MFRSA, the CODM refers to the individual or group responsible for allocating resources to different business segments and assessing their performance. In simple words, the CODM is the person who made key strategic decisions using external segment report. Why CODM is important? The CODM is important because the segment reporting is based on how the CODM reviews the business. So the segment reported in the financial statement must follow the same structure used by CODM internally. For example, in Maybank Berhad, the CODM is the group president and CEO together with the group executive committee, which is Datuk Khairul Saleh Ramli. He reviews the performance for segments such as Group Community Financial Service, Group Corporate Banking and Global Market, and Group Insurance and Takaful and others.
The next slide is about the types of segmental reports regarding the Maybank Berhad. The first one is business segment reports, which present financial data by regions where the company operates. The second one is geographical segment reports, where it's focused on different lines of business or types of product and services within a company. This is the analysis by business segments. This type of segmental report disaggregates the company's consolidated financial database on its different products and services, which form its distinct operating segments. This report is crucial for a diversified entity like Maybank because its different business lines, such as retail banking, investment banking, and insurance, have fundamentally different risk profiles, customer bases, and profit drivers. By separating them, a financial statement user can assess the individual performance and profitability of each business line. Next, they identify which segments are the main drivers of growth, like group investment banking and group insurance and takaful, in this case, and which may be underperforming, like group asset management. Understand the company's business model and its diversific action across different financial services, which is essential for making informed investment decisions. Without this breakdown, all these distinct activities would be bundled into one single set of numbers, hiding this crucial information. The following snippet is from the business segments chart in the Maybank Annual Report 2024, showing the profit before taxation and zakat for each segment. The first one is Group Community Financial Services, which is 6,234 million ringgit. Group Corporate Banking and Global Markets is 6,161 million ringgit. And the Group Investment Banking is 338 million ringgit. And for the Group Asset Management is 13 million ringgit. And for the Group Insurance and Takaful is 1,511 million ringgit Malaysia. It is about geographical location breakdown. This second type of segmental report breaks down the company's financial data based on the geographical areas in which it operates and generates revenue. For a multinational bank like Maybank, this report is essential for understanding its geographical diversification and risk exposure. It shows how reliant the company is on its domestic market versus its international operation like Singapore and Indonesia. This allows a financial statement user to assess the company's performance in different economic climates. It also identifies exposures to political regulatory, and currency risk in specific countries. It is to see where the company is achieving growth and where it facing challenges. For example, the snippet next will show the profit while the strong share in Singapore and saw a significant decline in Indonesia. This information helps user build a more accurate picture of the stability of sources to the company's earnings. The following snippet is from the analysis by geographical location chart in the Maybank Annual Report 2024, showing the profit before tax and zakat for each region. In Malaysia, 16,277 million. In Singapore is 3,001 million, and Indonesia is 380 million ringgit. And other locations is 547 million ringgit.
Moving on to the question 4, MFRS 8 requires company to disclose segment information so that the users can evaluate the nature and financial effect of different business activities. I will discuss two benefits that supported from the Maybank's 2024 annual report. The first one is better performance evaluation. The first benefit is that the segment reporting allows the users to clearly assess how each business segment is performing. This helps investors, analysts, and management identify which part of the company are strong or weak. For example, Maybank's 2024 segment report shows that the following profit before taxation: Community Financial Service 6.23 billion, Corporate Banking and Global Market 6.16 billion, Insurance and Takaful 1.51 billion, Investment Banking 328 million ringgit. From this information, users can immediately see which segment give the most profit and the performance improvement may be needed. This helps financial services users evaluate the company profitability, efficiency, and growth focus. The second one, understanding the geographic risks and opportunities. The second benefit is that the segment reporting helps users understand the company's geographical exposure, which is important for assessing risk. In Maybank 2024 segment, the net operating income is in Malaysia 27.7 billion, Singapore 6.1 billion, Indonesia 2.6 billion, and other location is 1.9 billion. This shows that they primarily independent on the market of Malaysian, but still generate significant income from Singapore and Indonesia. This helps users assess exposure to foreign market risks such as currency volatility, regulatory changes, and economic cycles. It also allows investors to gauge how well diversified the company is across different regions. To conclude, the segmental reporting under MFRS 8 provide the transparency and enhance decision making for the stakeholders.
If a company's annual report is like a yearly medical checkup, then MFRS 134 will be the quarterly health update. In between, MFRS 134 stands for Malaysian Financial Reporting Standard 134 Interim Financial Reporting. So it is the main job to ensure that when the companies like Maybank release their quarter report, they do so consistently and transparently, giving the investor timely and reliable snapshot of the performance. So what does it require? It require consistency. The quarterly reports must use the same accounting policies as the annual report, and the second will be the example, which is the condensed statement of financial position, income statement, cash flow, and keynotes explaining major changes since the last annual report. It's not full detail, but it is enough to show the important trend. Now, after Maybank closed its book for 2024, the two significant events occurred that every stakeholder should know about. First, on February 26, 2025, the board declared second interim dividend of 32 cents per share. This total massive 3.86 billion ringgit payout to shareholders. And the second will be on August 5, 2024. Maybank strengthened its leadership by appointing two new directors, which is Mr. Chiam Sao Hong and Mr. Victoria Furlan. So this is a strategic move, not a financial one. It's bring fresh expertise and also may affect the policy of the company in the future.
This slide explains the interim reporting period for Maybank's quarterly financial reporting for the years 2023 and 2024. This is important because MFRS 134 requires entity to prepare interim financial statement consistently using both current and comparative period. For each statement, we show the reporting cycle, the current interim period for 2024, and the comparative interim period for 2023. For the statement of financial position, the reporting period spans 12 months. The current interim period covers 1st January to 31st December 2024, and for comparison, we use 1st January to 31st December 2023. This ensures year-end positions are compared consistently. For the statement of profit or loss and other comprehensive income, Maybank reports quarterly. For this presentation, we highlight the fourth quarter, which is from the current 1st October 2024 to 31st December 2024 and comparative 1st October to 31st December 2023. Quarterly reporting helps users assess performance trends within the financial years. Maybank also disclose cumulative result for Sopel and Ochi. This covers the full financial year. Current cumulative 1st January to 31st December 2024. Comparative cumulative 1st January to 31st December 2023. This provides a complete view of annual performance. For the statement of changes in equity, the reporting is also for 12 months. Again, the period is 1st January to 31st December 2024, with a comparative period from 2023. This allows users to track changes in equity component across the full years. Finally, the statement of cash flows. The reporting cycle is also annual. The current period is 2024 and the comparative period is 2023, which highlight cash movement and liquidity trend year to year. This reporting period allows stakeholders to evaluate Maybank's performance consistently across different time frames. It also fulfills MFRS 134 requirements by ensuring comparability, transparency, and reliability in interim financial reporting.